Hello, everyone. It is my great pleasure to introduce the last panel of this conference. The moderator of this panel is Gillian Tett, the chair of the editorial board and editor-at-large of the Financial Times. Gillian, the floor is yours. Thank you very much.
Well, thank you very much indeed, and it is a great honor to be moderating this panel, which comes at the end of a couple of remarkable days of discussion about how climate change challenges are changing the financial system. And this panel, entitled Central Banks and Climate Change, How to Manage Expectations, Balance Actions, and Communicate and Contribute and Coordinate with Other Actors, is really intended to be the finale, the grand finale, throwing the debate forward, particularly ahead of the G20 meetings and G7 meetings coming up. And it's a historic panel for two reasons. Firstly, I think this is the first time, and maybe one of you can correct me if I'm wrong, I think it's the first time that we've had the governors of the Central Bank of China on the same panel with the Federal Reserve Governor, the EU Central Bank Governor, the French Central Bank Governor, and of course, Agustín. Maybe I'm wrong, but I can't see from a quick Google search a time when this has happened before. So this indicates the importance of collaboration and coordination, but it also comes at a historic moment given the degree to which central banks are getting involved in the challenges raised by climate change in a way that frankly would have seemed completely unimaginable just 5 years ago, never mind 15, 20 years ago, when central banking was seen as being all about money and all about inflation and things like that. So we have a lot of questions to drill down into around what this means for the financial system, for governments, and for the central banks. We have obviously a fantastic panel, and I'm not going to waste time by introducing them because they're clearly known to everybody. And we also have the scope for asking what this means in terms of the private sector and what central banks are expecting to do or not do in the coming months in relation to the banks, insurance companies, and other financial actors that they supervise. So a lot of questions, and I'm going to start first of all with Christine Lagarde from the European Central Bank and ask you, given that we have the G7, G20 meetings coming up, given the spotlight is very much now on the central banks in relation to the battle against climate change, I'd like to start by asking you, to what degree do you think the European Central Bank has a mandate to be fighting climate change? Should you be leading policy change or just trying to prepare the financial system for this? How far do you see this really feeding into the European Central Bank's monetary policy operations, particularly given that we had these remarkable comments from Jens Wiedemann yesterday from the Bundesbank, apparently accepting the idea of forms of green QE, to put it crudely. And how do you see this changing your financial stability oversight operations across the European Union at the moment?
Thank you so much, Gillian, and it's really lovely to be here with you all, with you in particular, Gillian, but all my colleagues and friends as well. And I'd like on this occasion to really thank the BIS, the Banque de France, the IMF and the NGFS for putting this together and bringing all those experts and non-experts together under your leadership, all of you moderators. Of course, there are lots of experts on the panel now. Gillian, I would like to start with quoting a sentence which actually triggered my decision at some stage to leave the private sector and to join the public sector. And that was a sentence that was pronounced by President Chirac back in 2002 at the Johannesburg 4th Summit. And he said this, he said, "Our house is burning and we are looking away." To me, that was a critical moment, and it encouraged me to drop the very comfortable life I had as a member of the private sector to join the public sector. And to your point, our planet is burning. And we central bankers could look down on our mandate and pretend that it is for others to act and that we should simply be followers. I don't think so. And I'm saying that because I believe that if we did, we would be failing on our mandate and that we would be missing in action. Now, why do I say we would be failing on our mandate? Because we would be failing on our mandate if we did not account for climate change when it comes to understanding and measuring inflation. Clearly, greater economic volatility has an impact on inflation. We would be failing on our mandate if we do not see that climate change could impair monetary policy transmission because it is likely to induce financial instability if it is not taken into account. We would be failing on our mandate if we did not measure the impact that climate change has on the assets that we hold, on the assets that we buy, and on the collaterals that we have in stock. And as opposed to that, I think we are squarely in our mandate when we alert key players in the economy. And I'd be very happy to come back. I know I should not talk for too long, but there is a giga climate test that I would like to say a few words about later on, if you allow me, and come back to me. But we would also be squarely in our mandate when we guide banks on climate-related risks, as well as environmental risks, and when we conduct supervisory stress test in 2022. We are squarely in our mandate when we incorporate climate change-related sustainable and responsible investment principles in our non-monetary policy portfolio on a Eurosystem basis. And we're squarely in our mandate when we include climate change and environmental risks and impact to our strategy review and draw full consequences of it in the form of a roadmap that I hope we will adopt. We are squarely in our mandate when we upgrade our models, which we are doing already, and we are squarely on in our mandate when we run our climate change center, which will soon be headed by a new recruit who will be joining on June the 15th. I want to introduce her, Irene Emskerk, who will be joining us. So in other words, we have to commit now. We have to deliver fast, and I think we have to implement decisively.
Well, thank you very much indeed, Madame Lagarde. I think that I should explain at the beginning that, in fact, we're going to split the panel discussion into two parts. The first part is going to be primarily about the public sector and what they could or should do. The second part will be looking more at the private sector. So I'll come back later and talk to you about the stress test questions and what you are expecting to see from the private sector in the second half. But just to pick that up on that issue about the mandate of the European Central Bank in terms of monetary policy, I'm curious, we did have this really quite striking intervention from the Bundesbank yesterday, which has previously indicated unease about introducing green policies into bond buying programs and other forms of QE. Given that we now appear to have the Bundesbank involved or supporting this stance, do you expect this to accelerate and to have any meaningful changes in how the ECB acts going forward? And I'm also curious, I'd like to pick up about the issue of inflation and how you are or are not modeling this, because we had a fascinating piece that was about to be published on the FT's platform Moral Money, an intervention from Larry Fink of BlackRock suggesting that climate change is going to make it much harder to measure inflationary pressures going forward or anticipate them, and could essentially accelerate them, including not just climate change, but the transition for climate change. I'm curious about your reflections on that as well.
On your first question, Gillian, my hope is very much that we will have a broad consensus on the part of all members of the Governing Council that climate change has to be taken into account, has to be factored in throughout the whole range of our activities. So whether it is in terms of, as I said earlier, modeling, and I'll come back to your question on inflation, whether it's about the monetary policy framework, whether it's about the purchases programs that we have, and obviously one thinks of the corporate bond purchase programs, we need, and hopefully we will collectively as a group deliberately take that into account. And we need to obviously be served by good data, good disclosure, appropriate common standards. And I'm delighted that the Commission is moving extremely fast, because I hope that the data that they will provide, the non-financial disclosure requirements that will apply to the financial statement of 2023 for most corporate accounts in Europe will actually help us a great deal in actually tailoring, without any regard to the size of what we do. I don't think that this is the point, but tailoring the kind of decisions that we make in relation to all that. Not to forget supervision, which is going to be impacted as well, which I regard slightly separately, because the SSM is a little bit separate from the sort of central bank side of the ECB, but it will also have an impact there as well. On the measure of inflation, I think that our teams are working really hard to appreciate the impact, and it's really a question of, in a way, discounting a risk that is often foreseen as being sort of 30 years ahead, and making sure that we can characterize it, identify it into the sort of 3 years projections that we are used to, and which determine the medium term that we do take into account. Now, there's a lot of heavy hitters in the modeling world who are looking at that, but I'm sure that we will be able to do that. I think that it will be far more difficult, actually, to factor in the impact that environmental and governance and social aspect of the ESG commitments will be going forward. In relation to the climate change, stricto sensu, as applied to inflation, I'm sure we'll get there.
Right. Well, thank you. Well, I'd like to turn to Governor Yigang now, and really, I'm very curious to hear your views on this. You were People's Bank of China, were the founding member of the NGFS, and you gave a very striking speech about 2 months ago, where you laid out China's policy towards this from a central banking perspective. In that speech, you mentioned that you were supporting the European Union in its green taxonomy, and appeared to echo many of the thoughts that Madame Lagarde, Governor Lagarde, has just shared as well. So I'm curious, can you tell us what you're doing at the People's Bank of China to fight climate change? And do you think you have a mandate to do that?
Yes, thank you, Gillian. I think right now, People's Bank of China, in China, the most important thing we are doing is to tell the general public how important green finance and climate change risk is, so that we would like to have a household, general public, firms, enterprise, and also ordinary people to understand the very deep implication of climate change, so that everybody have the urgency of doing something, whether to change the production style or change their lifestyle to reduce carbon emission. So that I think besides the very technical thing that the central bank can do in green finance, we spend a lot of time to do the general public education of the urgency, as Christine Lagarde just said, that our planet is in danger, is in fire. So that I think that's very important. Once general public and also the firms, enterprise, and the media, they understand the urgency, they would very much support to do the carbon reduction, whether to how to change their production mode or change their lifestyle to reduce carbon emission. I think in this regard, we are very closely cooperate with the international community, especially the central bank community, in the G20 framework, and also we, together with the Bank of France, we jointly establish NGFS, so that I think the climate change issue need international cooperation. We would like to cooperate with our central bank community and the financial community to design the financial tool to help the green transition. Thank you.
Thank you very much indeed. Can I ask, is the People's Bank of China introducing climate change issues into your modeling for the economic scenarios for the future, and how you assess future inflation pressures and economic trends?
Transition can create a lot of from the demand side and the supply side. And also it can change the inflation picture in the future. Because if in the past, most of the carbon emission is free, and right now we try to have a quota and also try to restrict the carbon emission. There is a premium of green energy, so that we have to have the model and how is the green premium, and how to encourage people to use green energy versus the traditional fossil fuel energy, so that that would change our inflationary forecast and the picture. And also in terms of economic modeling, our primary task is to try to have a smooth transition, which means that given what you have right now, for example, the coal generating facility and also the traditional fossil fuel transmission and power generating facilities, and how you make a transition from right now to a green energy network and a green energy production mode. That is very complicated. For example, you have to realize that what would be the trajectory or parameter given you already have a lot of bank loans and financial assets in those traditional facilities. And then you need to restrict and gradually reduce the traditional energy emission, and also at the same time gradually build up the clean energy system, so that in all this operation you need a model, calculation, and design for the smooth trajectory. At the same time, for the central bank, you have to look at what would be the impact on inflation, on the price pressure. So that's what we are doing.
Well, thank you. Well, certainly comments from Larry Fink of BlackRock, which I think have just gone up on the FT website, about how climate will intersect with inflation, are very thought-provoking. But one other question before I turn to Governor Powell. As you say, the People's Bank of China was indeed a founding member of the NGFS. It's a sign of the collaboration between different central banks. We are at a time of great geopolitical challenges, when collaboration is not always the key theme of international events. I'm curious, do you hope that climate could be one area where, say, America and China can work together along with the European Union? Governor Yigang?
I thought
I'm going to ask, okay, I'll ask that question to Governor Powell then, and I'll come back and ask you later. But Governor Powell, perhaps I'll ask that question to you. Okay. Are you hoping that climate is one area where the US can work with China and the European Union at a time when that's not always the main theme of other international relations right now?
Well, if you'll permit me, let me begin by saying thank you for having me here, Gillian, and also thanks to the BIS, the Banque de France, the IMF, and the NGFS for sponsoring this terrific conference. I'll answer that question directly and then turn it back to you. So I guess the answer to that would be yes. In fact, we're co-chairing the Sustainable Finance Working Group of the G20. The Treasury actually is the Treasury Department is co-chairing that with, I believe, the People's Bank of China. So to the extent there's there'll be collaboration there, and the Federal Reserve will be playing a supporting role consistent with our mandate in that working group. Remember, though, that the overall response of the United States government to climate change, and particularly as it relates to collaborating with other nations, is not a question for the Federal Reserve. It's really a question for the government.
I understand completely. So tell us then what the Federal Reserve is doing on the climate change front, because obviously you have a mandate which is different from other regions, most notably Europe. You also have emerged from the last few years with an overarching government that's taken a very different approach towards the climate change challenges under the last administration. So what is the Fed's approach at the moment? The Biden administration has indicated it wants to play catch up and even try to lead in the fight against climate change. How is that impacting what the Federal Reserve is doing? Do you have a mandate to take the same kind of measures that Christine Lagarde has been talking about in the European Union to fight climate change? To what degree are you embedding it in your own modeling about where the economy is going? And do you see any future path for incorporating it in, say, monetary policy?
Sure. So I'd like to start, I guess, by saying that there's no doubt that climate change poses profound challenges for the global economy and increased uncertainty for the financial system. Significant challenges lie ahead for all of us. And what's needed is a sustained global response, which will require bold steps and decades of sustained effort by national authorities, international groups, and the private sector. In the United States, our society's overall response to addressing climate change will have to come from elected officials who have sought and received a mandate from the voters. The impact of climate change will be far-reaching. It will bring challenges and opportunities as the economy evolves and adapts. And it's essential that there be a broad and durable public consensus to support our society's broad response to climate change. So you ask about the Fed. So the role of central banks will vary across countries, as you suggested, depending on a lot of factors, including particularly our statutory mandates and the scope of our responsibilities. At the Fed, we see our role as an important one that is tied tightly to our existing mandates. Our mandate hasn't changed. We haven't been assigned a role in setting overall policy. We don't have a secondary mandate to support the economic policy of the government, as many European banks do. So we view climate-related financial risk as a risk that falls under our existing mandates relating to bank supervision and financial stability. And what we're doing at a high level is we're undertaking a broad plan of careful analysis, significant public engagement, and great transparency regarding our role in addressing climate-related financial risks. You asked particularly about monetary policy, and I guess I would address that like this. There's no question that climate change has the potential to affect the structure of the economy over time. For example, people have mentioned inflation, but it's deeper than that. It can affect the industrial organization of the economy, labor market dynamics, productivity, the financial sector. All of those things can affect employment, inflation, and interest rates over time. So anything that can affect the outlook of the economy can, in principle, affect monetary policy. And so climate change would certainly qualify that. I would say, though, that today, climate change is not something that we directly consider in setting monetary policy. We are quite actively exploring exactly what climate change's implications are for our supervisory, regulatory, and financial stability responsibilities, which I can say more of if that would be desirable.
Yeah, well, I think I'd be curious to know more about that. I mean, I'd be curious to know what you're expecting the private sector to do, and perhaps we can come back to that in the second part. But I'm curious, so just to clarify, you don't think you have a mandate to act as a cheerleader to awaken public consciousness about the climate change issues in the way that Governor Gillian has described his role at the moment within China? You don't think you have that role within America?
I guess I would say it this way. Central banks clearly can play an important role in building data and analysis to understand the macroeconomic consequences of climate change, to quantify the risk to the financial system through scenario analysis, for example, and to ensure the resiliency of the financial sector to climate change. We will communicate all of that publicly, but we are not, and we do not seek to be, climate policymakers as such. We have a very specific mandate and precious independence, and which we think serves the public well, has served the public well, and I think we should avoid trying to fill in public policy where governments haven't done so yet. That's not up to us. But nonetheless, I do think our work can indirectly help educate the public on what's going on, and also I would think inform other parts of the government in the actions that they are assigned to assess.
Right. And just one other last quick question before I turn to Governor François Villeroy de Galhau. I'm curious, Mark Carney said yesterday that there is a need to create new training and awareness amongst regulators and central bankers, and essentially he's calling for central bankers to be sent back to school to learn about climate issues and how it impacts on them. I'm curious, given that the Federal Reserve is now joining the NGFS, a member of the NGFS, which it wasn't a year ago, do you anticipate that you're going to have retraining inside the Federal Reserve as well in terms of how to imagine these issues impacting the core monetary policy mandate that you have?
So I actually think all of us, all central banks and international organizations, are building institutional capacity. By the way, so are all of the major financial institutions doing the same. They're building internal intellectual capital, human capital to learn how to assess the risks and how to manage them, how to disclose them, all of those things. And we are certainly doing that at the Fed. And I would just take a second and give a lot of credit to the NGFS for what it's done in helping us all build intellectual capital and institutional capability around stress scenarios and in many other respects. So yes, we're engaged in that activity, and others are as well.
Right. Well, that's a very nice way to lead to Governor François Villeroy de Galhau from the Banque de France, who of course has been at the forefront of a lot of these moves by the NGFS to build the financial, the intellectual capital. And congratulations on this very interesting conference that the Banque de France has worked with the BIS to really push forward. I'm curious, speaking from either the Banque de France's perspective or from the NGFS's perspective, because we essentially have both hats on today, I'm curious, to what degree do you think that central banks should have a mandate to look at climate change issues? Do you think it's an essential component of central banking today? And speaking on behalf of the NGFS, do you think that enough is being done at the moment to explore how this affects monetary policy questions going forward? I'll come back to the financial supervision in a moment and the private sector.
No, so thank you very much, Gillian, including for your kind words. Let me start with the question of the mandate and echo Christine Lagarde's strong personal introduction. Let me be frank about that. Our generation changed its mind on this issue. I changed my mind. And so retraining, as you said, is underway. But then it raised the opposite question, so to say, from some skeptics saying, aren't you mixing your personal feelings and your collective and legal mandate? I think this is a question of mission creep. I think definitely not, but let me explain why. I think our climate change action is in full compliance with our mandate. I agree with Jay that we shouldn't be the only green game in town, and it's important that we don't overpromise. But having said that, look, as supervisors, it's probably the most obvious. Our mandate is financial stability, and nobody can contest that climate change could affect financial stability. There are climate-related risks. It's still perhaps less obvious for monetary policy and with our central bank's head. But here I'm completely convinced that it has a strong link with our primary mandate, which is price stability. It has a link with our secondary mandate in the case of the Eurosystem environment. But let me stick to the primary mandate of price stability. Again, nobody contests that climate change has long-term effect on inflation, and you mentioned Larry Fink. But it has also already short-term effects. Let me give you a very simple example. Part of the recent increase in energy prices in the euro area at the start of this year was linked to higher electricity prices in Spain due to the cold weather, and also to the introduction of a new surcharge on gas and fossil energies in Germany. So it's already now. And I don't want to comment on the statement of my friend and colleague Jens Weidmann yesterday, but they are welcome. And they are probably explained by this very simple constatation. It's linked to our primary mandate. Now about the NGFS and how can we help? It was created in Paris 3.5 years ago. The global secretariat is provided by the Banque de France in Paris. And we are really very proud of this collective success. Jay, may I especially thank the Federal Reserve for joining last December. It was a game changer. Can I make on them perhaps mention one promising foundation about climate scenarios and one question which you raised about monetary policy. About climate-related scenarios, this is one key proposal from the NGFS. It's a common foundation. We released the first wave in July last year. And let me inform you that we will publish an update next Monday. So it's very soon. I read some unfounded doubts on these scenarios. And let me be precise. NGFS works for this climate-related scenario, which are of the essence, obviously, because they link physical risk and economic consequences in the long run. We work with the best partner research institutes, 5 of them across Europe and the US. We publish a range, I insist on a range, of plausible and differentiated futures, 6 different scenarios to be published on Monday, from orderly transition to what we call hot house world. And we will regularly incorporate the development of scientific evidence. We don't pretend to publish a central forecast because there is no such thing at present as a central forecast. But it will be very useful for central banks and supervisors alike across the world. One last word about monetary policy. And this is probably the hottest issue at present, still more debated. But following what Christine said, I clearly hope that the ECB can be pioneer in this field with our strategy review to be published probably till next fall. To give my personal feelings, it's probably not very far from the ECB president, but it's only my personal words. I strongly hope that we will be the first central bank being able to decide 3 decisive steps on monetary policy. I insist on the word decide. There could be some delay for implementation, but to decide in principle about first forecast and economic modeling, Christine Lagarde insisted on that. It's sometimes a bit overlooked, but it's crucial, this economic modeling of climate, and our scenarios and NGFS will help. Second, to disclose and impose transparency requirements also on our counterparties. And last and not least, incorporate climate risk into our operations and our operations on corporates, be it on asset purchases as well on collateral policies. I think these steps are possible, not yet decided, but I strongly hope we can be pioneer in this field. And again, it's in full compliance with our mandate. It's not only to conclude with this word, Gillian, it's not only a legitimacy to act. I'm convinced it's a duty to act from ourselves.
Well, thank you very much indeed for that rousing call to arms. Just to clarify, I mean, I will come back later and ask exactly what everyone is asking the private sector to do, but you're in the camp of people who would argue that there needs to be, say, mandatory TCFD reporting by the private sector as one of these key steps. Do you expect that to come in later this year?
We had the opportunity to discuss this issue, Gillian, some days ago in the FT. I strongly hope it will come for COP26. I cannot guarantee it, but I see what happens at the European. In the French case, it's mandatory for financial institutions for 5 years already. For the European Union, it will be mandatory with standardized requirements from next year on for financial institutions and large corporates, significant corporates. And there are such trends in other jurisdictions. So we will see, but let me say that at least it's a realistic aim for COP26, and it could be a decisive one. It will raise another question, but we will probably discuss later, which is standardization, which is a still more tricky issue.
Well, I want to come back to that later and also ask Governor Powell and Governor Yigang whether they think that they will be following in the same path or not, or whether their governments will be following in the same path or not. I'm also curious, though, I'd like to draw you out a bit more about the comments from Jens Wiedemann yesterday about essentially accepting that there is a need to embed green issues into monetary policy and quantitative easing. Do you expect that is going to accelerate the pace at which the European Central Bank decarbonizes its portfolio? And to what degree do you see that as part of an effort to actively use fiscal monetary policy to really support green initiatives going forward?
To be very short on that, Gillian, even if I could speak German, I don't want to speak on behalf of my German colleague. But let me only say that these comments appear to me welcome, because again, climate change is part of our price stability mandate, the primary one, and they are logical and they are welcome.
Right. And one last question before I turn to Agustín. Carbon tax. How essential is it that we get some kind of global coordinated position on carbon taxes or carbon prices, not so much taxes, but carbon price? And do central banks have a role to play in that respect?
I highly wish it, and most economists do. If we have no carbon price in whatever form, carbon tax, carbon permits, we will miss something absolutely key. But clearly, this is beyond our remit as central banks. It's up to our governments and international coordination. And here, again, we are all aware around this table that we cannot be the only ones. We have to do everything we can do, but we cannot do everything. Can I quote a famous American founding father who was Benjamin Franklin? And I love this sentence. Jay, I speak under your American culture and history. There are several roads to success, but only one sure road to failure, and that is to try to please everyone. We cannot replace everyone. There are very strong expectations towards central banks, but we shouldn't overpromise. Carbon price is badly needed, and our action, however necessary, powerful it will be, cannot replace this more difficult part of the agenda.
Right. Well, thank you. Well, I will come back, and again, I'd be curious to know the thoughts on carbon prices from both the Federal Reserve and the People's Bank of China's perspective.
Here, again, if I may add one information, Gillian, but you are aware of that, here Europe lies ahead again, because we have already a system of carbon permits, ETS, which is a first step, not a final one, towards the necessary carbon price.
Well, thank you. Well, I'd like now to turn to Agustín Carstens from the Bank for International Settlements, who is in the happy position of being the only person on the panel who doesn't have to answer to politicians and doesn't have to answer to the public and voters, or actually run a monetary policy himself. Although, of course, previously you did in Mexico, so you've had plenty of experience of that. And Mexico is one of those countries which is in a very interesting position right now, policy-wise, in terms of climate policies. But I'm curious, from your position of overseeing the system, trying to herd cats in the central banking world, how do you evaluate what is going on right now? Because it is a quite remarkable shift from where central banking was just 5 years ago.
Well, thank you very much, Gillian. Well, to be sure, I have a very demanding bosses and very well politically oriented bosses, and I have 4 of them here in the panel with me. So in any case, I mean, it's great to have them as bosses, and we try to do our best here at the BIS to facilitate and complement whatever they are doing. I mean, I think from a central banking point of view, I celebrate, and I think this has been confirmed in this conference, is that we sort of have made or completed transition of questioning if central banks should be involved or why should central banks be involved, now to slowly go through to the next step, and it is how to do it. There are many different dimensions in which central banks should be involved in this. I think they obviously encompass all the range that you have been talking about, from monetary policy to financial regulation and supervision, even in a sense a little bit of what Gillian is doing in China of giving guidance or facilitating the debate with society. Of course, each central bank has its own mandate, has its own limits, and so on and so forth. And I also want to say that you know, this is a progression in central banking, and in many of the debates that have been out there, probably the change that should be expected is not as strong as it appears. I mean, for example, this debate of monetary policy and climate change. Well, I mean, at the end of the day, climate change, as François has said with Spain and electricity, it happens constantly. I come from a country, I was governor for 8 years, where we had probably the country with the most hurricanes in the world. And in the time I was a governor, the number of hurricanes increased dramatically. And given the geography of Mexico, we get hurricanes from the Pacific and from the Atlantic, and sometimes at the same time. And sometimes even we had an event where we had 2 hurricanes and an earthquake, although the earthquake was not necessarily related to climate change. Now, of course, central banks, we need to deal with the circumstance. What is a clear manifestation? The clear manifestation is that it changes relative prices. And basically it affects some sectors, it affects certain commodities, it affects certain services, and what central banks have to do is to prevent precisely those relative price changes to transmit themselves into inflation. We also need to assure that the price system is working adequately and that it can send signals to the real sector for them to reallocate resources. Because at the end of the day, what is needed in this thing of climate change is to have a massive reallocation of resources for the economies to be better prepared to what is coming. I think what really is a game changer is the fact that now there is a clear consensus that this type of phenomena will be with us for a while and that will not disappear. And therefore, it really, in terms of doing monetary policy and planning our activities ahead, it's important to start incorporating them into the type of scenarios that monetary policy and central banks will have to face as we move into the future. No? Many of these events are unpredictable, but then there are again other aspects that are more predictable. Now, of course, we need to support the investigation, we need to support the research, and hopefully what also can happen as a result of this collective action is that the price signals and the research that is done really mobilizes the resource allocation changes so to mitigate the impact of global change. So I think this is essential. And again, this is something that central banks have been doing and will continue to do. Now, of course, it's a major change, the fact that this is sort of a permanent shock and it will be coming for the future. And I'm sure that central banks will express this in the way they do it, in their mandates or in the interpretation on their mandates, also to some extent echoing the demand of their own societies, as we have been seeing. In the financial system, going back again to this aspect of allocation of resources, the financial system is key in reallocation, in allocation resources. I mean, I think at the end of the day, that's the main function of the financial sector. How to use savings today to be used for investment and move those resources into the future. And meanwhile, you know, industrial capacity, services can be generated. In this process, it would be unconscionable to think that we should not incorporate climate change. Why? Because it will affect the need of resource reallocation. And therefore, this also, I mean, it goes to the heart of the essence of financial markets. And therefore, I think that we need to consider it. There are many issues that have been discussed about that I share pretty much about data, about disclosure. But I would say at the end of the day, what we need to assure to is to have integral markets for them to do adequately its job, markets that are transparent, and even think about contingent markets that today they don't exist, and that make it difficult to do this as this resource reallocation that will be needed as a result of climate change. So, I mean, I see that here at the BIS, as you say, we have the benefit. I mean, in Mexico and in Spain, the way you exemplify you exemplify my role here. When I was governor, I was a bullfighter in the bull ring. Now I'm a spectator. I can sit in the stands and see the bullfights from there, even though now bullfights are not very ecological, I have to say. But nevertheless, now with the benefit of being in the stands and not being in the bullfight ring, I see that very good things are happening, and we try to identify where the gaps are or where we can really support this process, because I think it's an essential process.
Well, I'm going to ask you in a second about supporting the process. But before I do, given that you are a spectator, not in the bull ring, do you ever worry that the shift towards climate finance issues and climate issues may end up in any way creating a backlash, a public backlash against central banks, or undermining their credibility amongst the politicians in some areas? I mean, already we've seen, say, in America, that it is not clear that you know, large parts of the political spectrum don't think that that central banks should be talking about this kind of thing. Are you concerned about a backlash issue?
Well, at this stage, I'm more concerned about being, as Christine mentioned, being missing in action. I mean, it's obvious. I mean, the fact that we managed to that we're having this debate right now is a testament about the importance of the issue, and it's a testament that a society is demanding public officials to mind this issue. At this stage, I think that we still have a lot to contribute to frame the problem and to find solutions. And the real trick will be to find the adequate balance of where the central banks fit in. As many of my colleagues have said, we cannot do everything. As a matter of fact, our guiding principle should be, we should do whatever the instruments we have at our hand allow us. If we overpromise saying we will solve it, but we don't have the instruments, that would be wrong. But I'm sure that I mean, the debate I see among central bankers is precisely how to establish the right commitments, taking into account the instruments that are granted to you when your authorities or your legislature or whatever assigns you a mandate. That is the adequate relationship that needs to hold there.
Right. And just to turn to the question about the private sector and the financial stability mandate, which everybody on the panel agrees that they have, and perhaps everyone agrees is the most immediate area where climate change issues do impact what central banks do. Do you support at the BIS the call for mandatory TCFD reporting? And from your perspective, do you think that financial institutions around the world are ready for that?
Well, in principle, I would say yes to the first question. I mean, again, financial markets, the main ingredient of financial markets is information. And as my colleagues have been saying, we're dealing with a very difficult topic at hand. And the more we know, the better we will be able to do our job. We cannot do all the research, we cannot do all the forecasting that François related to if we don't have the information. We also have trying to look after having a transparent integral market. We need also to be able to link the characteristic, for example, of a bond with the final objective. The final objective is how that firm where you are invested is going to undertake actions that will affect at the end of the day climate change. That link needs to be established to have transparent, trustworthy markets. And that requires a lot of information. So I think that the more we have it, the better structure it is, the better. I think that also will provide a level playing field. And well, on the private sector, I see a lot of enthusiasm. I mean, I think that that in many different aspects, there has been a very interesting push by the private sector, and even in some aspects inviting the public sector to do more. And I think we're moving in that direction. I think what is important is to establish a virtual cycle and interaction between private and public sector. And I'm very hopeful that this virtual circle will come along.
Right. Well, thank you. Well, I'm going to ask you a quick question before I turn to François, which I will also ask to François, which is that you talk about the need to have a level playing field in the private sector. And yet what we have at the moment is the European Union moving along with the green taxonomy, which is essentially a top-down system created by governments. And then we also have the American ecosystem moving really towards a slightly different tempo, more a bottom-up type of framework. Are you concerned about fragmentation in the reporting standards? Do you think it's possible to get a coordinated reporting and transparency approach? Does that worry you, given that you're overseeing the entire central banking world and financial system? Or looking at it anyway, not overseeing it?
Well, I mean, I think the key to answer your question is cooperation. And as a matter of fact, we are very used to do that. If you think, for example, about the Basel principle, the core Basel principle on bank supervision, among others, one of the key motivators for it is precisely to establish level playing field and so on. So I think that we need to agree those, and hopefully at some. I mean, I'm sure that between the different fora of interaction, the G20, the FSB, even the Basel Committee, and of course with the help of the NGFS and so on, I think that we have different instances of coordination that at some point would pan out with at least these minimum standards, where we have where we can claim that there is a fair amount of level playing field without really inhibiting or prohibiting countries to move further in any direction, as it happens today with financial regulation.
So you'd like a green Basel Accord, would you? Would that be the kind of thing that you think would need?
Well, it would be great. It would be great.
Well, one problem with the Basel Accord, of course, was no sooner did it come out that all the financial sector started arbitraging it in various creative ways and started creating all kinds of, innovation in the financial system. But I mean, I'd like to ask you, Governor Villeroy, whether you think that it matters that the EU has its green taxonomy. This is its flagship. People are very proud of it. The People's Bank of China has indicated its support for it a couple of months ago, and yet certainly America doesn't appear to be minded to adopt it anytime soon. Does this matter?
Gillian, let me first say that I couldn't agree more with what Agustín said about the key importance of data. And Yigang said it also earlier. If we don't have data, we won't succeed in any of the avenues we mentioned today. And then comes, so I will not repeat what I said about mandatory disclosure, but then comes the issue of standardization, which you just mentioned, and which would be the following step, and probably a necessary one. I wouldn't exaggerate the difference between a European approach, which would be top-down, and an American approach, which would be bottom-up. Obviously, the European authorities listen to private actors, and I'm sure that the American decision is also subject to public debate and decision. Having said that, we will need to achieve a common framework. And here starts the difficulty, obviously. It could be basic, but already significant for all jurisdictions, with the possibility to be more ambitious for those who want to. But it should be significant. And let me insist on that. It should bring on board the double materiality promoted by the European Commission, which is, as you know, consider both the risks that affect the entity, but also the impact it has on its environment. And it should encourage a broad coverage of the ESG topic, not only the E, but also the S and the G. So in this regard, there is the IFRS initiative. It is welcome, but it should not be self-sufficient, as it could neglect the S and G dimensions. And as such, key standards are public goods, clearly, which require co-construction. And I know that President Lagarde likes this word, so do I, co-construction with political authorities. So I don't know if it will be, Agustín, a new Basel agreement or the next Paris one or the Washington agreement. Wherever it is, it will be a difficult task, but I'm confident that with co-construction, we can achieve it. Can I add one word, Gillian, about another very powerful tool with the private sector, which is stress test? May I?
Yes, please do.
Just to say that when we will have disclosure and standardized disclosure, we have what I could call the snapshot of risk. These are the present exposure. But stress test could provide us with the video of risk, a forward-looking analysis of climate-related risk. And this is also more important, as we all know that climate-related risks are long-run. And so we have run with the French supervisor ACPR a very innovative and unprecedented exercise with banks and insurance companies. It has already very positive lessons, including the active participation bottom-up of financial institutions. It still raises many methodological questions. And so my appeal or my invitation to supervisors worldwide within the NGFS would be to start the exercise and to learn the lesson. We shouldn't wait to have a perfect methodology on stress test before implementing some first action. Having said that, if we can have this measurement of climate-related risk with disclosure and with stress test, then we will have the question of climate-related capital requirements. But having a good measure of this climate-related risk, an adequate measure, is a prerequisite before thinking of possibly additional capital requirements.
As I understand it, François, I think you are one of the first central banks, if not the first central bank, to do such an extensive stress test exercise. What did that show in terms of the readiness of the French financial system? And to what degree were the disparities between, say, insurance companies and banks?
Perhaps 3 quick lessons. First, we were positively surprised by the active involvement of financial institutions themselves. It was a voluntary participation, and most, all important banks and insurance companies took part. Second, a very clear lesson is that the transition risks are more important than physical risk, at least in Europe, due to our climate situation. And the more orderly the transition is, the more limited the risk will be. And this is where our NGFS scenarios to be published next Monday are very important. So we should start the transition, including the increase of carbon prices, as early as possible. And third lesson is that financial institutions are clearly at a different stage. And to give you an obvious example, some stick to what I could call a static approach. They suppose, it was very long run, 2015, so 30 years. They suppose that their exposure, their sectorial exposure, will be the same in 30 years than today. And then the risk is higher. But some take already a dynamic approach, saying, looking at the climate-related risk, I will shift my exposure to less exposed sectors. And this is a very promising tool also not only for us to measure the risk, but for them to change their strategy. And here we are only at the start of the methodological journey. But looking at what we have done in the last 18 months in the NGFS, I am very confident that till the end of next year, we can deliver in the NGFS not an harmonized methodology, but a very operational methodology and tools for all supervisors using this stress test. And this will be another decisive game changer.
Well, that seems like a good moment to bring Chairman Powell in and ask, does the Federal Reserve plan to conduct climate change stress tests anytime soon? And will you embrace the NGFS's methodology for looking at these issues? Because, of course, you know, we heard earlier Agustín talking about the hurricanes and how that had changed debate. I very keenly remember the Dallas Fed coming out quite unexpectedly a couple of years ago during the Trump administration and saying that events like the Houston weather incidents had created a need to start looking at climate risks. And so when even the Dallas Fed is saying this in terms of evaluating financial sector risks, you know that the mood is changing. So I'm curious, will the Fed follow the French Central Bank and others in doing climate change stress tests?
Gillian, we haven't made a decision on what to do about climate scenario analysis, and I'm not going to be announcing one here today. But I will say that what's apparent, though, is that if you look across central banks and actually what large regulated financial institutions are doing, climate scenario analysis is emerging as one of the principal tools for assessing the risks of climate change to the financial risks and highlighting risks. And so, you know, as we do our work here, many important decisions lie ahead of us, some of them in the near term, and we'll announce those as appropriate. But I would say that there are a lot of reasons to think that climate scenario analysis can contribute in a very positive way to this. I mean, one thing that it clearly does is it raises awareness within institutions and within within our own thinking of how these paths may play out. It also illustrates, it can be used to illustrate what different sets of government policies might bring forth in terms of results for climate. So there's a lot to like about climate stress tests, and we've benefited from carefully studying what the ECB did, what the Bank of England did, what the Banque de France and the ACPR did. It's all informative, and you can just understand that we're carefully studying all of that. We're also in significant discussions with particularly the larger financial institutions are all doing different kinds of climate stress analysis, and we're putting that all together and thinking about how we might move forward with that. But again, haven't made a formal decision on that. But nonetheless, there's a lot to like about this as a potential tool.
And does the Federal Reserve have a position on whether it's time to introduce TCFD reporting or some form of climate change reporting in corporate accounts and banking accounts?
Yeah, so decisions about in our world here, our highly capable Securities and Exchange Commission has authority over disclosure. So that's a decision for them and for the administration. But let me just say, at a high level, it would be hard to overstate the centrality and fundamental foundational nature of better data and better disclosure. I'll read you a quote from our own Federal Advisory Committee. These are banks that we regulate and supervise, and they said it so well, I'll just quote it. The development of uniform data standards and metrics for disclosures will be critical to adequately identify and compare climate risks across businesses and sectors. It's as simple as that. So if we need to have the data, and it needs to be disclosed in a manner that is helpful in understanding the risks of climate change, and so that's a tall order, easier to say than do. And the question of when to make it mandatory as opposed to when to focus, obviously, what we're headed toward, the ideal will be, standardized disclosure that is highly informative and consistent across jurisdictions. And I very much agree with the sort of analogy to the banking supervision and regulation. That was quite a process to go through to get all of the major economies around the world, all the economies, on the same page on banking regulation. And it took some time, but it happened. That's what needs to happen here. Disclosure needs to be consistent. It needs to be useful. And the time at which you make it mandatory, I think, is an issue for in our jurisdiction for the SEC. But again, the importance of it can hardly be overstated.
So you would support a Green Basel Accord?
Those would be your words, not mine. What I'm suggesting is that in getting to TCFD has been highly useful. 1,500 companies using it, many trillions of dollars worth of assets under it. It's a great foundation, but it's not an accounting system. And the disclosures that are coming out are useful, but they're not consistent. And we have a lot more to learn. For example, for banks, what data can you get from the companies that you lend to? Whose responsibility is that data? Who should develop that data? Exactly what data should you get? So I think there's a process to be had, and as you know, this is what the FSB is working on, IFRS is working on it, the G20 is working on it. We're all working on this. This is and deserves to be very much at the top of the list of things to do, is to get to a disclosure system that is, again, useful for investors, again, to Agustin's point, so that the financial markets can do their job in allocating capital, for governments, so that we can understand the implications of our policies, and for financial institutions, and by the way, non-financial institutions too, they can understand what their activities are, what they mean for climate change, and how they can live up to the commitments that many of them are now making across the world to get to net zero, to get to Paris consistent levels of carbon emissions, greenhouse gas emissions by 2050.
Well, I'm curious, if you look at, say, TCFD adoption, there's a very stark discrepancy. You've got very high levels of TCFD adoption in the UK, extreme enthusiasm in Japan. Almost any financial institution that moves in Japan appears to have adopted it. And yet the US is lagging dramatically behind relative to the scale of its financial sector. So I'm curious, when you look with your supervisory hat on across the US financial system, do you think it's prepared for the type of changes that could be coming down the road pretty soon? Or do you think the last 4 years of differing policy approaches means that there's actually going to have to be a lot of catch up in the US in the domestic financial institution to prepare for this? Because although you've got the big banks and Wall Street banks who are exposed to European regulations having done a lot, certainly I see tremendous discrepancy amongst smaller financial institutions. And, I'm often being asked, what exactly is TCFD by smaller financial groups in America? So I'm curious about your views on that.
Well, to your point, there's a great deal of interest and momentum on addressing climate among U.S. companies, and that goes for both financial and non-financial companies. If you're a publicly traded large company, as you mentioned, particularly one that might be active abroad, this is a high focus for you. If you look at any annual report, if you listen to the things that they're doing, many of them are making commitments. So we see that, and I think that process is moving along very well. They're also, managing under the watchful eyes of investors who are with a strong and growing focus on ESG issues. Many large U.S. financial institutions have committed to net zero by 2050. Many have signed up for the Glasgow Financial Alliance for Net Zero pledge. You're right that this, for now, is principally a focus of large financial institutions and the regional financial institutions too. And that's where our focus is at this moment as well. We're heavily engaged with those who are actively involved in this, and I think that's appropriate, appropriate place for us to be working now.
Right. If time permits at the end, I'll come back and ask you each briefly to say what you'd like to tell the G20 and whether you think the COVID pandemic has changed the political climate around this in any way to make it easier to talk about climate change issues. It's obviously a question that's very interesting in the US context, but I want to bring in Governor Yi Gang at this point and ask, is China preparing to support TCFD and embrace TCFD? And to what degree do you think Chinese financial institutions are able or willing to incorporate these types of approaches in how they disclose information?
Yes, I think we work very closely with Financial Stability Board on TCFD standard. We ask our largest commercial bank, ICBC, to join as a member of TCFD, and also try to following the standard. And for the central bank, as you said, that our task is to make a level of playing field fair to all the private sectors. Our job is first to do the taxonomy, and on the taxonomy, we work closely with our EU colleague and working on the international convergence of commonly recognized taxonomy on green loan and green bond and etc. So that we already have our standard for green loan in 2015, and also we have our standard for green bond in 2018, so that we work on the taxonomy domestically as well as with our international colleagues. Second, we want to make the disclosure standard very clear, so that that is also the main purpose of TCFD. We work on that first to ask our major commercial bank to disclose their climate risk related information, carbon emission information, and then we work on to ask our listed companies to disclose their carbon information. And our goal is make a uniform disclosure standard, and in the future we will go to the direction of mandatory disclosure of climate related information. Third, for the central bank, we also design some monetary policy and credit policy incentive tools to encourage private sector to make more loans to the green projects and to help the green transition. And fourth, we already conducted the stress test, and also they call it evaluation criteria on the financial sector, measuring how the performance on the green transition, which is that is we try to evaluate commercial banks' green assets and the brown assets, and also in the future we are considering to sign different risk weights on the green assets versus the brown assets, so that for the green assets, commercial bank can save their economic capital. So that is provide the positive incentive, regulatory incentive for the financial institutions to have more green assets. So that I think to answer your question very briefly, we are positive on the TCFD standard, and also try to work on the detail and make it the standard, the disclosure requirement, and also the positive policy toolkits, as well as the risk measurement and the stress test to the entire financial sector in China.
Well, thank you very much indeed, Governor Ye Gang, and I'm glad you explained that, because I think that some people in the Western world don't realize the degree to which the People's Bank of China is moving ahead in this degree. I am curious, first of all, on the question of the stress tests. What type of results did you find, or are you finding, from your stress testing of the Chinese financial system in terms of its readiness for climate change? And do you have any plans to publish the results in a public forum to increase the public understanding of these important issues and change the national consciousness as a result?
I'm sure that in the future we will publish the result. You see, we are already doing the pilot program on the commercial bank already. First, we have the evaluation procedure. We call it the macro-prudential and also the climate-related evaluations on the commercial bank on their assets. And also, I think our bank is gradually recognize how important the climate change implication, the climate change risk is. So that right now they are planning their asset allocation strategy and their investment strategy, so that in the future we will following their strategy and provide some guideline to this transition. But I want to provide a caveat here. That is, given the economy in the transition, given you have power generation and say that the entire structure of the economy, for the central bank, our task is managing the transition in a smooth manner. For example, that if you suddenly have some suddenly move, and then you would have some probably crisis or risk event immediately, so that we are very much alert on the trajectory or parameter we try to guidance the commercial bank to use, so that to make the entire transition smooth and safely.
Right. Well, speaking as a journalist, I would certainly be very interested to see the results as and when you do publish any stress test results in the future, because of course there is great interest around the world in the readiness and the transition issues of the Chinese financial system towards this, as there is in other countries too. And I'm going to ask Christine Lagarde in a few moments about whether the ECB will publish stress test results and what attitude you have towards regulatory weighting. But Governor Ye Gang, I'd like to ask you another question, which is about taxonomies. The People's Bank of China has been developing its own taxonomy, which of course you've been using through things like green bonds. The European Union has its own taxonomy too. You signaled in your speech that you support the efforts the European Union is making, but how similar do you think the EU taxonomy and the Chinese taxonomies are, and does it matter if they are a bit different? Of course, America doesn't have a taxonomy yet, so I can't ask you to compare the Chinese and US taxonomies, but I'm curious about how similar the taxonomies need to be.
I think it's very similar. At this point, I can say that for the green bond taxonomy, and China and the EU taxonomy have 80% similarities. And you know that we just revised a new version of our green bond taxonomy last April. And we, in that new taxonomy, we remove all the fossil fuel project from the green bond catalog. So that means that we working with international colleagues, especially in EU, and also you know that as Jay mentioned that US and China we are co-chairing the G20 Sustainable Finance Work Group. So that I think we work with our US colleague and the EU colleague to make the taxonomy commonly recognized internationally. That is our goal.
Right, that's fascinating. Well, I'd like to now turn to Christine Lagarde and ask from the European Central Bank point of view. As I say, if we have time at the end, I'd like to ask you each very briefly to reflect on how COVID-19 has or has not changed this debate and messages for G20, if we have time. But before we do that, does the European Central Bank plan to publish climate stress tests soon? Do you plan to do climate stress tests soon?
Thank you, Gillian. Two things. One is we have already published some economy-wide climate stress test. We did that a couple of months ago, and I'd just like to say a few words about that because it's quite a gigantic project of which we have published the first part, and that will be updated as soon as the scenario that François was talking about will be released on Monday, because we will rerun the exercise that we have conducted. And what we have done is actually map several massive databases together. So we use the scenario of the NGFS, which are being challenged by some, but I would completely align myself with the comments made by François. I think the scenarios are quite solid, and the latest version will be even more solid. So we're mapping that with massive financial data that actually concern 4 million corporate accounts, 4 million corporate accounts, plus 1,600 banks. And that covers pretty much all banks in the European Union and, of course, beyond, but I'm particularly concerned about the European Union in my current function. And we try to assess what the risks are, taking into account a period of 30 years. So you can imagine the magnitude of the exercise that was conducted. We are already finding some really interesting findings and conclusions from that. The first one is clearly, by all accounts, the fact that whatever cost there is about transition, about prevention, it certainly dwarfs the risk that would be associated with doing nothing. So in other words, sitting back doing nothing now is going to cost enormously more down the road than what it will cost today to try to prevent, to try to mitigate, and to help with the transition. That's the key overriding findings. And that is clearly obvious when you actually assess the nature of risk, which we see for the moment as largely physical risks, and they vary over the course of the geography, if you will. So you have much more risks related to flood in certain northern part of Europe, much more risk related to drought and shortage of water in the southern part of Europe. And the second findings is that some of these risks are concentrated in a rather small number of banks. So you have about 10% of the banks that are covered by that study, which actually will see an increase of their risk in the magnitude of 30%, whereas the others see increases of risks that are much lower. So we are publishing that. We will continue to publish as soon as we can complete our exercise of mapping all these databases. And when the scenarios are released next Monday by the NGFS, as François has indicated. That's one category of climate test. The second category, which we will publish next year in 22, is those that are based on supervision. And for that one, we have published last December a guide to tell the banks, this is what we expect. We really would like you to focus on this, and that. And as part of our supervision mission, we will go and inspect whether you have taken that into account. First cut a few months ago when we tried to assess how much was taken into account was not exactly satisfactory, but they are all on notice and they're all going to move forward with hopefully implementing. Gillian, if you allow me, I would like to draw on the experience that I have previously as finance minister, having gone through the financial crisis and my IMF period, to just draw our attention to two key risks that I see. And this is what I would call the play it again, Sam kind of risks. The first one is And this is no criticism of the initiative taken by Mark Carney and the huge efforts put into it by Michael Bloomberg. But TCFD is a private sector initiative in the main, with voluntary observance of the principles. And that rings so much with me as the self-regulation principles that we applied prior to the great financial crisis, where the light touch regulation, let the business organize themselves, they will find out the principles that they should abide from, and the markets will sort them out. Well, we know where that took us. So that's risk number one, which in my view justifies plainly that the regulators and those authorities in charge actually co-construct together, if necessary, using a building block approach where they have common principles from which they move towards more ambitious goals. That would plainly justify that we move in that direction. And if there is one message that I would like to give to the G20, it's please go in that direction. The second risk that I see is clearly that we yet again go into this sort of double standards or different types of disclosures as we have seen it back right after the great financial crisis, where key principles were devised by the IFRS and IASB, which were followed by some, generally accepted on a voluntary basis by others, not accepted at all by others somewhere else, because it is a political game. And we have to just be cognizant of that and make sure that we have as much standardization as possible so that we can actually, to quote another great American, and I'm not making any particular political preference, but he said it right, trust, but verify. Because otherwise, we're going to risk massive greenwashing of those who will pledge, but not necessarily plan, prepare, and deliver. And I believe that standardization is actually going to cut that risk of the greenwashing that really would hurt all the developments. So you ask me what I would like to ask the private sector. I'm going to borrow a page of Goldman Sachs, which I had taken myself on when I was in the private sector. Be swans. Smart, working hard, ambitious, and nice. Nice because climate change is a public good, or climate and the environment are public goods. Be nice to those so that all of us on the panel and beyond, we can stand proudly in front of our grandchildren, say, they were swans because we asked them to be so and we verified.
Well, thank you. Well, I'd like to pick it up on a few of those, few of the comments you made there and just ask a few questions about them. Given that your economic stress test, your macro stress test has shown such an imbalance in terms of where the risks will hit financial sector players, do you plan to publish the names of the banks that will be mostly affected, given that that's clearly quite an important issue in terms of the wider perception and debate in the market around financial institutions, and probably would be the most powerful catalyst you can imagine to encourage them to act?
Gut reaction, and it's not something that has been discussed internally, but from what I have seen and from what the financial stability consequences could be as a result, I think my gut feeling, as I said, and it's only that, is probably not, because I think the first port of call will be those particular banks so that they can take all the necessary steps in order to reinforce, mitigate against the risks that they're exposed to, in order to alleviate those risks and maintain financial stability, without which we don't have price stability. Circle back to the mandate.
Right. And I'm curious about your reaction to Governor Yi Gang's comment that the People's Bank of China is looking in the future to try and use risk weighting as a tool to redirect financial flows towards greener activities. Does the European Central Bank have any thoughts about whether it's going to introduce brown and green risk weighting systems in the future?
We could only do that if we had the green and the brown. For the moment in Europe, while we have made much progress, and as you know, this is totally transparent and open and everybody can go and verify, but for the moment, we only have the green side of the taxonomy, and more work needs to be put into the less green, little brown, very brown, extremely brown. And I think that we can only, start using those tools and those data and measurements once they're complete. They're not complete. We're trying to move as fast as we can. I know the European Parliament is doing that as well. And it's critically important because if we just look at Europe, 330 billion euros are needed annually in order to reach the commitments of the Paris Agreement. And that is going to mean a green bond markets, a green product markets in general, that is going to expand significantly. It is one of the fastest growing. A large portion of it, by the way, is located in Europe. A large portion of it is in euro as a currency. And we need to move fast in order to be able to use those tools in whichever way we can. But I'm delighted that Yi Gang is referring to the good cooperation we have in that respect, because we try to compare notes and we try to have as little discrepancy as is possible.
Well, certainly if there is 80% consistency between the two taxonomies, that's very striking. But I'm also curious about your point about the difference between taking a private sector-led initiative towards reporting and disclosure, which has driven most of the debate in America, and the efforts of people like Mike Bloomberg, the work of SASB and others, and the different attitude in the European Union, where it's been much more top-down, mandatory, driven by the Commission in terms of the taxonomy. Do you support the idea of a Green Basel Accord that would actually create a collective framework on the part of central bankers and bank supervisors to actually lay down some kind of mandate rather than simply let the private sector take the lead?
As I said, I think we ought to be concerned about exclusively private sector-led initiative in such matters. And I think that the issue of our responsibility towards climate change is something that needs to be debated and decided upon by much larger groups when it comes to a public good. I think that this will involve probably decision makers at the level of parliament, at the level of governments. And while I'm sure under Agustin's excellent leadership, the BIS will do great efforts and the FSB will endeavor as well. I think that it's a much larger project that involved all decision makers, not just the bankers or not just the private sector. Right.
Well, I'd like to maybe ask you, perhaps, we haven't got a lot of time left, but each, reflect a bit on what message you'd like to give the G20. I'm curious, Chairman Powell, Jay, when you think about what needs to happen, America has taken a fairly private sector-led approach thus far. Do you think that's the right one? Do you think there needs to be more government mandate involved in where the climate change debate is going? And what kind of message would you give to the G20? And I'm also curious from your point of view, just to add one other question, about whether you think COVID-19 has made it easier for public sector leaders in America to talk about climate change issues within your own domestic political environment.
Well, in essence, climate change is in the nature of a very large market failure, and hence expecting the private sector to deal with it without any intervention from authorities is not going to be a good strategy. Although I would say using the private sector and its ability to allocate capital is often a good strategy, but subject to what I just said. I think that decisions about taxonomies amount to decisions about allocating capital to different sectors, preferring one over another, and it's inherently a political act. That is something that needs to be done by directly politically accountable elected people who have a mandate. I also want to just be clear. You've been asking about climate stress tests. I want to draw a very clear distinction, at least for us, between climate scenario analysis and stress tests, which have immediate regulatory consequences. For us, the benefits of scenario analysis are for everyone, including for the regulated institution. Indeed, many of them are doing them now. They're not meant to be setting up a regulatory consequence, which obviously does flow from our regulatory stress tests. In terms of COVID-19, you know, I'm tempted to say it's too early to say what the implications are. You know, I would say it's a fact that our collaboration muscles are in good shape. There was a lot of collaboration globally, a lot of meetings about collaborating around the world, and that's that may help. Maybe one other thing, and this is you know, maybe a stretch, but there are those who want to see 100% certainty about climate change, and I would just say the pandemic shows that even low probability events do happen, and what we do is we build resilience against them and we address them. We don't wait until they bear fruit, and I think climate change, maybe that's some learning that can be had from the pandemic on that front. As for the G20, you know, we don't central banks don't go to the leaders meetings. And you know, it's really ultimately governments who set those broad principles, appropriately so, for that the members stand behind. That's really not a role for us. We have a narrow mandate, but we will contribute, as Yigang and I have discussed, to the Sustainable Finance Working Group, and contribute our thoughts on the economy and such within the context of our mandate.
Right. I'd like to ask Governor Yigang what kind of message you might have for the G20 leaders when they meet, given that you are working obviously with your American counterparts in the working group.
I want to send a message that we like to continue our economic recovery and try to control COVID-19 to minimize COVID-19's negative impact on the global economy. And also in this process, I like to work with G20 colleagues on the sustainable finance work, which is first finish drafting the roadmap to decarbonization, and also together with our US colleague and the Italian presidency and all other G20 colleagues, try to have a disclosure standard by the end of this year. That's our message.
Well, that's a very bold message, and it certainly is a good challenge for the G20. I'm going to ask Agustín, and then I'm going to ask François to say the last word, since I think you are technically the co-hosts here. Agustín, do you want to say something about what your message to the G20 would be? And I'm curious for any reflections on whether you think the pandemic has changed the political willingness to act.
Yes, thank you very much, Gillian. On the G20, I mean, I think this has come very strongly in this panel, is the urgent need of cooperation and coordination. And I think we need to coordinate across countries, across sectors, and across policies. There are chapters of the G20 where there are ministers of finance, governors of central banks, but there are obviously other aspects out there that are discussed in other parts of the G20. So I think the G20 it's a great forum to try to improve this cooperation and coordination that, needless to say, will be of the essence. We can start with cooperating, collaborating with the treasuries, but you know, I think it will matter a lot for the final outcome. Especially we have a multi-decade horizon in front of us. Other policies and other sectors will be of the essence. And yes, I think COVID has very much in the line of what Jay said. COVID has really put very bluntly in front of us the possibility of having a global simultaneous shocks that we need to be better prepared to act on. And needless to say, climate change really could be an area where these type of problems can manifest themselves. So yes, I think that COVID is a great wake-up call for us to mobilize ourselves and address this problem.
Right. Governor Villeroy, François, your last word, and then I'll say a couple of thoughts to wrap up. What would you tell the G20?
About the G20, it will gather in Rome at the end of October. And Christine reminded us at the start of this panel about Johannesburg, almost 20 years ago, and its shared message. Our home is burning, and we are looking away. If I had a wish of more positive message for Rome, it would be we are looking ahead. We are in the oldest city of old Europe, and we are looking ahead. And we are looking ahead together, which is also very important. It's a unique opportunity of political alignment. You stressed it, Gillian. In this panel, we were the three continents gathered on a common cause. And this is very new. Europe lied ahead some years ago, and it felt sometimes a bit lonely. So it's a unique opportunity to look ahead together. On the substance, and this will be a very positive message for our fellow citizens. On the substance, there is also the agenda on financial issue, which we discussed. If I had to express a personal wish, but more as a citizen, it would be also for the G20 to make progress on two other key points, which are not financial issues. The first one is carbon pricing, whatever form it takes. If not, it will definitely be the missing element. And the other element, which is probably easier to deliver, is don't forget about funding climate transformation in poor or intermediate countries. It was a promise in Paris 6 years ago. Now we should deliver.
Well, thank you very much indeed. And thank you to all of you for your comments and thoughts and interventions. I just have a few points to make to really sum up. Firstly, that the debate that we've just heard is absolutely remarkable if you look back at the sweep of history, not just because, as I said earlier, that we have representatives from the US, Chinese, European central banks all on the same stage, or the same virtual stage, if you like, but also because 5 years ago, it would have been almost unimaginable to have central banks talking about their mandates and challenges and responsibilities in this way. And it is a startling sign of how quickly the zeitgeist has changed. And if nothing else, COVID-19 has shown that sometimes the zeitgeist can change very fast, and the political and public audiences can change their ideas of what's normal and expected with a speed that's often unimaginable beforehand. Secondly, there is obviously still a lot of work to be done in terms of trying to flesh out what this means in practice. Different jurisdictions have different ideas about the degree to which this can or cannot be embedded in monetary policy. Clearly, Europe and the US are in different situations about definitions of their own mandates, but everybody agrees that this matters enormously for financial stability and financial supervision. And the questions about how one conducts stress tests, the questions about whether there needs to be regulatory weights in the future assigned to green or brown assets, the questions around reporting are obviously extremely complex. There's going to be a lot of debate and dialogue. There are differences of views, and it won't be necessarily simple to resolve, particularly in terms of the degree to which it's private sector driven or public sector driven. But these are clearly issues that will be discussed. And this leads me to my third point, which is this debate is moving quite fast behind the scenes. There is a lot of discussion happening. If anyone's watching and thinks that this is something which is going to be a 5-10 year development, I think they're probably wrong. With the COP26 talks coming down the tracks, I suspect there will be quite a lot of breaking news in this respect from all of your jurisdictions, but also in terms of the international forums and bodies like the BIS. So that's a long-winded way of saying, watch this space, because as somebody who's committed to trying to cover this as a journalist and trying to communicate it to the wider public in the most effective way, for good, bad, and ugly, I think we're going to have a lot of news to write about and report on in the coming weeks and months in these issues. So I'll just finish by saying thank you all for your very thoughtful comments, and very best of luck in navigating your different challenges in terms of trying to find ways to combat climate change in the coming months. Thank you.
Merci.
Thank you.
Goodbye.